Take a look at your banking app right now. Look at that number, the balance you've worked years to build. It looks safe, doesn't it? It feels like security. But what if I told you that while the numbers are staying the same, the value behind them is being systematically liquidated while you sleep? Welcome to 2026. We were told the post-pandemic inflation was transitory. Then we were told the high interest rates would save us. But here we are, caught in the ultimate debt trap. Most people think a liquidation only happens when a business goes bankrupt. They are wrong. In 2026, the most dangerous liquidation is the one happening to the middle class. Your savings aren't being stolen by a thief in the night. They are being dissolved by a system that requires your poverty to sustain its own debt.
I'm Sam, and today, we are going to pull back the curtain on the 2026 debt trap.
This is Finance Unmasked, and by the end of this video, you will never look at your savings account the same way again. To understand the trap, we have to unmask the illusion of nominal value. In the world of finance, nominal is what you see, but real is what you keep. In 2026, the gap between these two has become a canyon. For decades, the global economy functioned on the idea that if you worked hard and saved 10% of your income, you'd be set for retirement. But the math has fundamentally broken. With global debt to GDP ratios hitting record highs this year, governments have found themselves in a corner. They can't raise taxes enough to pay the interest, and they can't cut spending without causing a revolt. So, they've chosen the third option, financial repression. This is the secret part of the liquidation. By keeping interest rates lower than the true cost of living, the system is effectively taxing your savings without ever sending you a bill. Every year your money sits in a traditional account, you are losing 5, 8, or even 10% of your actual purchasing power. Your $50,000 still says $50,000 on the screen, but it only buys $40,000 worth of 2024 goods. That is liquidation by design. Why is 2026 different? Because we have reached the debt ceiling of the soul. It's not just governments anymore, it's the individual. The average person is now swimming in credit card debt, auto loans, and by now, pay later schemes that have become the primary way people afford groceries. We've entered a cycle where debt is being used to service old debt. This is the definition of a trap. When the cost of servicing that debt rises, even slightly, the entire house of cards begins to shake. The financial institutions know this. They aren't trying to help you get out of debt. They are optimizing the trap to ensure you stay in it just long enough to extract every cent of interest possible. They have masked these traps in rewards programs and cashback offers, but the reality is that they are buying your future labor at a massive discount. You aren't just paying for your past purchases, you are liquidating your future freedom. Now, let's talk about the secret liquidation. Have you noticed how everything is becoming a subscription? You don't own your software, you don't own your music, and in many cases, you don't even truly own the equity in your home because of the way modern refinancing works. This shift from ownership to usership is a key component of the 2026 debt trap. When you don't own assets, you are vulnerable to the whims of the liquidators. In 2026, we are seeing a massive transfer of wealth where corporate entities are buying up residential real estate at a scale never seen before. They are turning a nation of homeowners into a nation of renters. Why? Because a renter is a permanent source of cash flow for the elite. If you are trapped in a cycle of renting your life, you can never build the hard savings necessary to escape the trap. Your potential for wealth is being liquidated before it even has a chance to grow. The most brilliant part of any trap is making the victim believe they are free. The financial industry has spent billions on psychological profiling to keep you spending. In 2026, AI-driven marketing knows your weaknesses better than you do. It knows exactly when you feel vulnerable and when you are most likely to click purchase on a high-interest credit line. They have gamified debt. We see colorful bars and credit scores that make us feel like we are winning a game, but the only people winning are the ones holding the ledger. We've been conditioned to view savings as boring and debt as leverage. But leverage is a double-edged sword, and in a volatile 2026 market, that sword is swinging toward the consumer. We have to unmask the lie that says you need to look rich to be successful. The truly wealthy are those who own their time, not those who own a leased luxury car they can't afford. As we look deeper into the year, we see the shadow of central bank digital currencies, or CBDCs, looming over our privacy and our savings. This is the final stage of the trap. Imagine a world where your savings have an expiration date, use it or lose it, to stimulate the economy. This isn't science fiction, it's a policy discussion happening in boardrooms right now. A digital currency gives the liquidators a direct dial into your wallet. They can penalize certain types of spending or freeze assets with the click of a button. The debt trap of 2026 is becoming a digital cage. If all your wealth is stored in a system that can be turned off or devalued instantly, do you really have savings at all? Or do you just have permission to spend until that permission is revoked? So, how do we get out? How do we stop the liquidation? The first step is awareness. You have to stop thinking in currency and start thinking in assets. Currency is a tool for transactions, but it is a terrible store of value in a debt trap economy. To escape the liquidation, you must move your wealth into things the system cannot print more of. Whether it's physical gold, decentralized assets like Bitcoin, productive land, or even your own specialized education, you must own things that have intrinsic value. You have to cut the ties to high-interest consumer debt immediately. It is better to live a small life today so you can own a big life tomorrow. The system wants you to be a consumer. You must choose to be a sovereign individual. You have to unmask the marketing, ignore the social pressure, and realize that your savings account is a leak that needs to be plugged. The 2026 debt trap is designed to be invisible. It is designed to be comfortable until it's too late to move. But because you are watching this, you already have the advantage. You've taken the first step towards seeing the world as it truly is, not as the banks want you to see it. Here at Finance Unmasked, we don't care about the hype, we care about the truth. We are going to continue tearing down these financial myths piece by piece. If you want to stay ahead of the curve and protect your family's future in these uncertain times, you need to be part of this community. Subscribe to Finance Unmasked right now and join a group of people dedicated to financial sovereignty. Click that notification bell so you don't miss our deep dives into the 2026 market shifts. If this video opened your eyes, hit the like button and share it with one person you care about, because the only thing more dangerous than the debt trap is facing it alone.
I'm Sam, and it's time to take off the mask. I'll see you in the next video.